Hello, traders. Welcome back to Your Nifty Guy. I hope all of you are doing well. There's a saying in trading, knowing when not to trade is just as important as knowing when to trade. Many times, the difference between a winning trader and a struggling one isn't just about spotting opportunities, but also about having the discipline to avoid forced trades in uncertain market conditions. In today's video, I'll break down my complete Nifty analysis and share the trade plan for tomorrow. We'll talk about the key levels to watch, where the markets may give us high probability setups, and equally important, the zones where it's better to step back and protect your capital. So make sure to stay till the end because in trading, sometimes the best move you can make is no move at all. And before we dive in, don't forget to like this video, subscribe to the channel, share it with your trading community. Also, drop your thoughts in the comments. I'd love to hear how you approach those days when setting out is the smarter choice. On that note, we'll start with today's video. And as I had discussed in yesterday's video, I had also mentioned very clearly that most probably I will not be taking any trades today because I am seeing and sensing some uncertainty in the markets. And I have had a good week and I do not want to jeopardize whatever I have earned just because I want to trade every single day. And I would want and wait the markets to give me some more clarity before I jump in. And as that was the plan, today was a no trading day for me. Now the markets opened with a huge gap up on the news of GST 2.0, which was announced yesterday, where major uh, middle class goods and consumption sector items, the GST has been reduced to a certain extent, which can boost up the consumption, especially keeping in mind the festive season is right across the corner, right? And that is the reason why markets opened with a huge gap up. But then, as you can see, the gap up did not sustain. Now, the thing to ponder about here is what is the market more concerned, or what is the factor that is driving the markets more? Whether it is the GST rate cut, which can boost consumption in the domestic sector, or is it the trade tariff war that is going on with the US that can hamper the country's exports to US? And what is the market more, what is the driving force behind the market? So right now there is again a bit of a confusion. Now I do not specifically trade on news or based on news setups, and that was the reason why uh, I had already mentioned I was not even aware that the GST announcements were scheduled for yesterday while I made the videos. The news came in much later, and that is the reason I just let the prices follow. And out here around yesterday when we were doing the analysis, when I was planning my trades, again you have to try to understand one day the markets are falling, the next day the markets are rising up, retracing almost the entire move, right? Again, markets closing near the day's low on one day, closing near the day's high on another day. So it's all a bit confusing right now. And keeping all those particular price points and the price movements into consideration is something which I had mentioned yesterday that okay, I will be planning to not actively trade in case something very enticing, something very picture perfect, like a bookish kind of a trade pops up in front of me. Only then I will be trading that, and of course with strict stop loss. But then that was not the case, and that was the exact reason why I stayed out of the markets today. And that is why the quote that something which I started with, knowing when not to trade is equally important as knowing when to trade. Now, there's another key observation that I have done the on Nifty is if you observe the candles on daily time frames are quite wide range candles, right? Now, this today's candle is roughly 267 points, which is more than a percent, right? If we see the candles which formed around here, to consider this candle, this is also 0.88%. So the daily candles are quite a big range candles, but on an intraday basis, we are not getting that momentum on any direction. Even if you consider today's market, markets opened with a gap up, fell for the first 5 minutes, went up, consolidated, went down. As soon as the breakdown came in, gave a slight pullback, then slowly and sluggishly went down again, giving a move on the upside, taking some liquidity from here, from where the markets actually fell down. Now, it totally depends on whether you want to participate in such sluggish price action, especially as an option buyer. Uh, Now, my answer to that is an absolute no, and that is the reason why I decided to absolutely refrain from trading in today's market. Now, I'll be deleting this. We don't need this. On a daily time frame as well, we have already created a new high. We have gone above the daily fib resistance, so I will be deleting this as well. Now, what I feel is on a daily time frame, we are kind of stuck between these two areas. The bottom is the gap support area, and on top is the weekly fib resistance, right? If we see the weekly charts again, sorry, if we have a look at the weekly chart, so this was the huge 1, 2, 3, 4, 5, 6 weeks of fall in Nifty, post which Nifty consolidated for a week with a huge gap up, took a resistance from uh, around the weekly fib levels, and then we have only come down from here, marking this particular low as an point of importance low. That is why I have already marked it in a different color, and it's still on my chart. I'll wait for prices to come around it, and based on how the prices react is something around which I can plan my trading activity. This entire week as well is also within the range of the previous week. This is an inside bar, as you can already see. This is black in color, which is the inside bar indicator on my charts. And if we are not going up above and closing above 25,017 tomorrow, being the weekly closing, or going down below 24,400, we are right now absolutely in the middle. So I'm assuming none of these will break. Again, nothing can be predicted in the market. Of course, anything can happen, but so far as I can see, this is going to be an inside consolidation candle in the previous week's entire candle, right? So this was the entire candle of previous week, and right now we are inside the previous week's candle. And again, my plan of action would again be a bit focused on the sideways part, and that is the reason I will be again refraining myself from active trading. On a 75 minutes time frame, this is what I have observed is if we look at the price action. Right. If we look at the market structure, there was a clear double bottom around here. Breakout came, pullback came. We have created a new high. Again, we are here. So either we turn back around from here and then we move up, or are we going to go down and breaching this particular bottom? That is something which we need to observe. I hope the market structure is clear the way I am looking at the market structure. This is on a 75 minutes time frame. Based on this particular thing, I will be using one fib level, which is this low with today's high. We are already near the 0.5 to 0.618 support zone. This is the 75-minute fib, right? So on a 15 minutes time frame, we are already at a support of a higher time frame. Now, how does the prices react around here is something that we need to keep an eye on. Below today's low, again, I will wait for the very elusive trade that I have, wherein I will wait for a negative candle to give me a closing below today's low, and very good if it gives me a closing up below the 0.618 level as well, which is the lower end of this particular boundary. And in case if the prices move back up, this is where I plan to do a scalp on the longer side. Now, around here, if the prices consolidates, gives us a good double bottom and or a consolidation breakout, This is something I will be interested in going long for with a very, very low stop loss. Needless to say, below this, we are absolutely, absolutely short. Now, I'll quickly also use the fib levels to. So, this is today's candle, right? Which is an entire down move, and I'll also mark the resistance. In case I'm going long, this will be the first targets either for this trade or consolidation and breakout. Around this zone will be where I will be looking at actively booking my positions. And similarly, around these levels, if I get a negative price action, that is where I will look at creating a short entry. But on a broader term, broader perspective, speaking from much, much more, biggest thing is on a higher time frame is that we are in a sideways price action, stuck between a resistance and between a support. And we can observe some more volatility around here. And that is the reason I'll try to restrict my trading activities to bare minimum for now, right? So, and there is some news around the US labor markets. I'll just quickly read it. Just a second, guys. So the US labor market is under intense scrutiny this week as investors, policymakers, economists await Friday's August job report to be released this Friday. A critical release that could either stabilize or rattle already shaky market sentiment. Okay, so tomorrow is the US job data as well, non-farm payrolls as they say, and based on that, uh, there will be a clearance on what is happening with the US economy, whether we are there are recessionary fears as well, and US is kind of the mother market, and it is said that whenever US sneezes, the world catches a cold. However, way the Indian political scenarios places the thing that we might not be the exports to the US is just 0.2% and or just 2% of the entire, not 0.2%, just 2% of the entire GDP of India. And even if the entire exports are stopped, it is not going to create any major dent in the Indian economy. And the domestic consumption is far supreme. And obviously, the government is doing whatever it can by reducing the taxes to boost up the economy on the domestic front to balance the deficit that is coming in from the export, which is being impacted by the US tariff. But then again, there is something which is mandatory, right? Superpower as a US is not good. It's good to have them on your side, and it's not good for the country as a whole if you are against them, right? And right now, what is the scenario on a macroeconomic front is something, the picture is not looking too good. And see, that is the reason why, despite very good opening with a very good announcement of GST rate cuts, the markets did not sustain and close near the day's low. So that is something that is of primary concern, and that is something which we need to take care of. Above this, again, the fib level obviously will be long. Sorry to put it out at the last moment. But then these are certain things we need the global overall outlook to be a bit stabilized because post only that they will be getting a clear direction. Otherwise, we'll be simply moving in between ranges. There will be range shifts, no doubt, again, but mostly the markets will be range bound, and as option buyers, that will give us very less trading opportunities. So we need to find out not we need don't, we don't need to find out, but we need to wait for the overall global macroeconomic scenarios to cool off or maybe come to a solution where everybody is winning. So yeah, I hope the plan of action for for tomorrow is extremely clear. Try to wait on the sidelines and don't commit to the market until the market commits to you. So that wraps up today's analysis and the trade plan for tomorrow. Remember, trading isn't always about action. Sometimes it's about patience and protecting your capital. If you found value in this video, hit the like button, subscribe to the channel, and share it with your trading community. And don't forget to drop a comment with your views on tomorrow's market. I always enjoy reading your thoughts. This is your Nifty Guy signing off. Trade smart, stay disciplined, and I'll catch you in the next one. Cheers.